Hello everyone. In this video, we are going to discuss the functions of commercial banks in India. Now, we are going to cover the definition of the bank, basically what is a commercial bank, and then we shall discuss different types of banks and then functions of commercial banks in India. Now, coming to the definition, when we say bank, bank refers to an institution that accepts deposits of money from the public, withdrawable by check, and used for lending. So, here the key words are bank refers to an institution that accepts the deposits of money. It accepts only deposits of money, not commodities. That's why deposits of money, and this money can be withdrawn through a check or otherwise. So that is actually a bank. And then the legal definition of the bank, which is given in the Banking Regulation Act 1949, it says that banking means the accepting for the purpose of lending or investment of deposits of money from the public, which is repayable on demand or otherwise, and withdrawal by check, draft, order, or otherwise. So again, the same keywords we are finding in the legal definition. That means basically bank refers to the institution which basically lends or invests money, and it also accepts the deposits from the public, and these deposits should be repayable on demand or otherwise, and this can be withdrawn by a check or a draft or otherwise. Then what makes the financial institution a bank? That means there are basically two types of financial institution. One is banking financial institution, another is non-banking financial institution. So now what makes some financial institution a bank? The key characteristics of a typical bank or a typical financial institution which makes bank is that it accepts basically the deposits which are checkable. That means it can be withdrawn through a check. So it is the banks can issue only a check of their own. Non-banking financial institution cannot issue a check of their own. Then it also lends money to the people, and then it actually basically it has two characters. One is that it accepts deposits and it actually lends money. Then coming to the deposits of money, it accepts the deposit of the money and not the goods or non-money financial assets. It accepts only the money, and it doesn't accept the goods as deposit. And then it also accepts deposits from the public and not merely from the shareholders. There could be actually a large number of shareholders in a bank, and then bank does not accept deposit only from its shareholder, rather it accepts deposit from the public. And then these are all repayable. These deposits are repayable, and this can be withdrawn by a check, or on your demand you can also withdraw your cash. Then bank's second function is lending, and it does not lend for financing its own business. Rather, it lends to others also. It lends to public. Whoever wants to do investment can go to a bank and withdraw and can take a loan. So it does not accept deposit only from its shareholders. It accepts deposit from public. Similarly, it lends to the public, and it lends directly as well as indirectly. Directly means that the bank issues a loan directly to the customer, whoever is willing to borrow, and it also buys government securities, or it can buy bonds, or it can buy shares. So that's how it is lending indirectly to the public. So these are the two functions that makes a financial institution a bank, and those are basically checkable deposits and lending to the public. Then to understand the overall banking structure, we can say that at the top we have the regulatory authority, that is the Reserve Bank of India, and then we have scheduled banks, and then we have non-scheduled banks. We shall discuss what is a scheduled bank or non-scheduled bank, but broadly we can classify banks into two types. One is scheduled bank, other is non-scheduled bank. Then within scheduled bank, we have state cooperative banks and then have commercial banks. Then within non-scheduled banks, we have central cooperative banks and primary credit societies, and then we have commercial banks. Now you will find that cooperative banks are coming in both sides, both in scheduled banks as well as in non-scheduled banks. Now state cooperatives are at the state level, you can say, but then central cooperatives and central cooperative banks and primary credit societies are basically working at the panchayat level or village level or at district level, and that's the basic difference between the central cooperative and the private cooperative, that is in the non-scheduled bank, but state cooperative banks are at the are in as coming under the scheduled banks. So scheduled banks have state cooperative banks as well as commercial banks, and then we have Indian commercial banks could have two types, and that could be Indian bank or it could be a foreign bank, and then similarly Indian banks could be public sector bank or it could be a private sector bank. Similarly, public sector banks we have SBI and its subsidiaries, and then other nationalized banks, and then we have regional rural banks. Now, of course, SBI and its subsidiaries have been all merged together. So we can say that SBI, and then we have other nationalist banks, and then we have regional rural banks. Then we have what is the meaning of scheduled bank? Basically, the banks which have been included in the second schedule of the Reserve Bank of India Act 1932 are called as scheduled banks. And the scheduled banks basically have to keep certain balance as minimum balance, that is in addition to the average daily balance it shall maintain in India assets the value of which shall not be less than such percentage not exceeding 40% of the total of its demand and time limit, or basically this is the amount decided by the Reserve Bank of India from time to time. So that is a scheduled bank, and non-scheduled banks are not included in the second schedule of the RBI Act 1934. So that is basic difference between a scheduled bank and a non-scheduled bank. Now, coming to the classification of a commercial bank, broadly we can say that we have public sector banks, and then we have private sector banks, and then we have foreign banks. Within public sector, we have merged banks, and then we have independent banks. Then within private sector, we have old private sector banks, and then we have new private sector banks, and then we have foreign banks. So we can say broadly public sector, private sector, and foreign banks. And then recently, in fact, from 1st April 2020, we find two types of banks. One is merged banks, and then other is independent banks. So now in total, we have 12 banks, and the merged banks are State Bank of India, Bank of Baroda, Punjab National Bank, Canara Bank, Indian Bank, and Union Bank of India. Now, when you see these merged banks, and State Bank of India basically has taken into its fold all the State Bank of India and all its associate banks. There are 7 banks, and then all have been merged together. Now they become State Bank of India. Similarly, Vijaya Bank and Dena Bank were merged. That became Bank of Baroda. Then Oriental Bank of Commerce, United Bank of India, and Punjab National Banks were merged. That becomes Punjab National Bank. Then Syndicate Bank and Canara Banks were merged. That becomes Canara Bank. Then Indian Bank and Allahabad Banks are merged, and that becomes Indian Bank. And then Union Bank of India, Andhra Bank, and Corporation Banks were merged. That becomes Union Bank of India. So that's how we have 6 merged banks, and then similarly we have 6 other independent banks. Those are Indian Overseas Bank, and then we have UCO Bank, we have Bank of Maharashtra, then we have Punjab and Sindh Bank, then we have Bank of India and Central Bank of India. So this we have 6 small banks and 6 independent banks, and our largest bank is basically the State Bank of India, followed by the Punjab National Bank. So these are the biggest 2 nationalized banks in India. Then coming to the private sector banks, we have 13 old private sector banks, starting like Catholic Syrian Bank, City Union Bank, Dhanalakshmi Bank, Federal Bank, ING Vaishya Bank, Jammu and Kashmir Bank, and then Karnataka Bank, then Karur Vaishya Bank, then Lakshmi Vilas Bank, Nainital Bank, and Ratnakar Bank, South Indian Bank, Tamil Nadu Mercantile Bank. So these are all 13 old private sector banks. Then we have new 7 private sector banks. Those are Axis Bank, Development Credit Bank, HDFC Bank, ICICI Bank, IndusLand Bank, Kotak Mahindra Bank, and the Yes Bank. You must be knowing that ICICI Bank and HDFC Banks, ICICI Bank was not a bank earlier. It used to provide only credit to the industries, and now it has become a full-fledged bank, and it is one of the good banks in the country. Similarly, this bank is also a good private sector bank, and then Kotak Mahindra Bank is also doing well. And so these are basically some of the private sector banks in the country. Now, coming to the foreign banks, we have a large number of foreign banks, and of course, we have 33 banks actually altogether, and then foreign banks. And then the most famous, we all know that Citibank, and then we have Standard Chartered Bank, and then we have HSBC Bank. So these are all famous banks. But other than that, also since we have liberalized Indian banking sector, now there are a lot of banks coming to India and opening their branches in this country. So these are all foreign banks in the country. Now, coming to the functions of the bank, we discussed actually when we discussed the definition of the bank, we told that bank basically receives deposits as well as it lends money to the public. So those are actually basically the primary functions. But if you see usually the function in details, we can actually discuss quite a more number of functions. So basically, it actually borrows and then it raises or it takes up money and then lending or advancing of money either upon or without security. Okay, so it will lend money to the people with or without security, and then it also acts as an agent for any government or local authority or any other person or persons group of people basically. uh, and then it can also actually contract for public and private loans and negotiate and issue the same. And then comes managing and carrying out of any issue, public or private, of state, municipal, or other loans. So basically, it can issue actually. It can carry out any public issue, basically debentures, bonds, actually for mobilizing money for the government. Now, it also carries on the transaction, and it also can guarantee the business and to yeah. So it can carrying on transacting every kind of guarantee and indemnity business. Then managing and selling, realizing any property. So basically, when bank gives loan, actually we get mortgage, and if there is a requirement, it can actually sell those property. Similarly, it can also acquire or hold any property of a right which may harm the security. So similar actually point comes. It can acquire some property also, or it can sell the property, which are basically kept with the bank as the security when the bank had given a loan. And then it can also undertake and execute the trust, and then it can basically help the trust in mobilizing money, and then in its banking activities on behalf of the trust. And then it can undertake the administration of estates as executor, trustee, or otherwise. And similarly, it can also aid the establishment and support of associations, institutions, funds, and trusts, and acquisition, construction, maintenance, and alteration of any building or works necessary or convenient for the purpose of company. And it can also sell, improve, manage, develop, exchange, lease, mortgage, dispose of all or any part of the property and rights of the company. Similarly, it can acquire and undertake the whole or any part of the business of any person or a company. And then all other things that are incidental or conducive to the promotion or advancement of the business of the company, basically that is bank or any other form of business which the central government may by notification in the official gazette specify. So basically these are the functions. But in summary, actually, if you try to remember, we can say that it actually receives deposit from the public, and then it actually lends money to the public. So in this process, actually, it does this function for the people and for a group of people. It does for the local government, It can mobilize money through bonds and debentures through different ways. It can mobilize money directly or indirectly. So basically, these are the functions of the commercial bank. Thank you for watching this video. If you like this video, you may and subscribe and share this video with others. Thank you for watching.